All right, Rudy, it's a blast to have you here with us today on Mine Stock Talk, and we appreciate you taking the time to join us. And we'd love if you could share with us in your 35 plus years experience how you first got into the mining industry, what inspired and motivated you to enter the industry, and why gold in particular.
Great lead-off question, and I really appreciate Kevin and Robin the opportunity to be on your show here today. I was born and raised in New York City. I got into Columbia University's engineering school because of my backstroke, not because of my grades. And my undergraduate degree at Columbia is in mining engineering. And during that time, I actually met a professor who was a big role model for me named 𝗏𝗏𝗟𝗏. He was the original gold bug, a Scotsman, and he actually saw what happened in the gold market in the 1970s when I met him. And I just became hooked on gold. The past 40 plus years now, I've been in the gold industry.
They say diamonds are a girl's best friend, but I'm starting to think gold is.
I was a market maker in the late 70s, early 80s. Gold was the big story then, and of course Vancouver and all the resource stocks. What got you going in starting Seabridge? What was the motivation, the impetus to get it built up?
Well, I think the motivation came from a prior role I had as a CEO of a gold mining company that actually built a number of mines in Central America. I ran into a horrific gold market, a gold going from 400 down to 260. The two of the mines we built actually were expropriated by the governments. So seeing how real political risk was. And when we looked at the gold market and gold mining industry back then, we saw an industry that actually was not living up to expectations. People buy mining stocks or gold stocks with the expectation that if the price of gold goes up by 10%, the price of your gold mining stock should outperform the gold price, meaning going up by more than 10%. If you look at the track record of our industry, however, that's not the case. All of the major gold companies and most of the junior companies underperform the gold price in a large way. So our goal was quite simple at Seabridge when we started in 1999. It was to build a company that provided the best leverage and optionality to a higher gold price. Gold was 260 at the time. We believed that the price of gold would go significantly higher, which it has. And our business model was quite simple. Build a company that provides more gold ownership per share in the ground than any company out there, and keep that growing. And over the past 25 years now, we've delivered on that.
If there's a correlation with the common shares in sort of like an indirect ownership in the reserves and the resource, and yet as well you have a fairly significant copper picture as well, will that fit into the model you've designed?
Absolutely. It just makes the project more desirable by the big, not just the big gold companies, but the big copper companies. If you look at KSM today, which is our flagship project, and you ignore our copper, KSM today is the largest undeveloped gold project in the world, second to none, measured by reserves or resources. If you ignore our gold and just look at our copper at KSM, KSM is the third largest copper project in the world undeveloped. Suits a number of potential, partners.
Now, gold's always sort of been the focus, but now that we're entering into copper, was that sort of like a happy accident, or was it something you guys always thought would possibly be there already?
I like to say it was by design, but it was pure luck. We bought KSM because of the gold content and seeing exploration upside in gold. We just happened to find a lot of copper there along with the gold. It's great to have it now, but it was not by design.
Working the property, obviously, that's a few years back. Has it been well explored? And I understand it's fairly large too.
Well, we now have over $1 billion invested in KSM. A lot of that is exploration, also engineering. We've also taken this project through the environmental assessment approval process, both provincially and federally, with those approvals in hand. And just recently, we received the designation of substantially started by the BC regulators, which means that the project is now, it does not expire. The approvals, they're good for the life of the project.
Now, in terms of partnership that you have in the KSM project, we understand that Nations Royalty is one of those?
So that is a result of First Nations Royalty buying a net profits that was held by the Nisga'a Nation. We have a number of First Nations partners at KSM, most notably the Tahltan Nation and the Nisga'a Nation. In fact, we have impact benefit agreements in place with both the Tahltan and the Nisga'a Nation. I would view them as our partners in the project moving forward, because as a result of the impact benefit agreements that they have, they'll have certainty in terms of opportunities for contracting, jobs, employment, and also financial interest in the project as well.
Well, I'd say for us as the average retail investor, and we would consider ourselves to be ethical investors, that's really important to us. We're actually very fortunate to sit down and speak with Cody and Derek from Nations Royalty last week, or was it the week before?
Yeah.
Something like that. And really great guys. And I mean, they're getting off to a really good start with that company.
I watched that interview. I thought they both did a great job, as did you guys. I think that's a very clever model that they're pursuing. There's a lot of royalties out there held by First Nations, quite honestly, that'll never become producing royalties. So their ability to actually go out and acquire royalties directly from the First Nations and create value immediately for the First Nation is a welcome thing.
In terms of development, the KSM property is obviously hugely significant. How do you see development occurring? Timing, if you have it.
We have made it very clear from almost day one that KSM is beyond our capabilities to build. In fact, when we look at the universe of big companies, there's maybe 7 companies out there that have the financial, technical, and social wherewithal to build and operate a mine like KSM. That's not us. So our focus now is to bring in a major mining company as a partner that will do the heavy lifting, complete bankable feasibility on the project, make a construction decision, and finally lead us to first production. So that dialogue is ongoing now with a number of big companies. In fact, we have 6 engaged with us right now. We are running a formal joint venture process being led by RBC Capital Markets. The recent designation we received from the government is a huge de-risking and unlocking of value for the project. When we look at our history at the project, this is probably the most important event in our company's history, getting this designation, meaning that there's no showstopper in front of this project in terms of permits expiring.
And I suppose that makes it very attractive to anyone you have at the table that might want to build it.
Absolutely. I mean, just think these big companies that are looking at this opportunity, it's going to be at least a $6 billion build, $6 billion US, so a bit more Canadian. You would be hard pressed to have a company come up and commit to that type of investment, knowing that in July 2026, our approvals could have expired. Well, that's now removed, and the project is a clear path forward.
Say when one of these big guys comes in, does a little unhostile takeover of Seabridge, what happens to you after that?
We're not looking for a takeover.
Okay.
I'm pretty confident that our shareholders would not welcome a price tag of today's share price plus a market premium. We believe we get a lot more value to our shareholders in the form of a joint venture.
Mm-hmm.
So our ask on a joint venture is a 2-phased earn-in with our potential partner. Phase 1, the partner would come in and sole fund and complete bankable feasibility. For that investment, they would then earn a small minority interest in the project. And that kicks off phase 2, which during phase 2, they would have to commit to building the mine and securing financing for the project. Our goal is to hang on to a 35 to 49% interest in the project. We know that any major mining company is going to want control of the project. We're willing to give that up. Our expectation is that we don't have to fund 35 to 49% of the capital. We're looking for as much of a carry there as we can get.
Right. So thanks for clarifying that, because I didn't quite understand it. I think that's probably going to be helpful for anybody else that's listening, trying to understand how all this works.
The operator or whoever would build it would have to be someone capable of handling a property that has big copper and a lot of gold in it at the same time. I guess that does limit who it is.
Sure does. So we have companies that are both focused on gold and copper or individually at the table with us. One of the unique things about KSM is we call it a project. It really is a district. We have 5 deposits at KSM that give us 12 billion tons of economic resources. Our mine plans now, which take us through 72 years, only captures about 40% of that resource. This is a project that's going to be not only multi-generational, but could go beyond the century mark in terms of production. But the nice thing about each of our 5 deposits, each deposit is unique in terms of gold versus copper. 2 of the deposits have much higher copper content relative to gold, and the other 3 deposits have higher gold content relative to copper. So for a company coming in, if they want to focus on the copper content more than the gold content, they can go after those 2 deposits that are more copper relative to gold first, or earlier in the mine plan. Those companies that want more gold, they can focus on the 3 deposits that are now in our pre-feasibility study, which shows an initial 33-year mine life for the project of open pit only.
Looks like that adds a lot of diversity, therefore more value to shareholders.
If you have a price movement in gold over the years that keeps going up, which is how we look at it, and the same for copper, will the deal that you you put together with a builder operator, will that still allow for leverage to the Seabridge shareholders if the metals do increase in price over time?
Absolutely. So if you look at our forecasts right now for the project and our pre-feasibility study, the first 33 years of mine life at KSM, we produced over 1 million ounces of gold per year for 33 years, and the earlier years actually more, and we produced about 178 million pounds of copper a year. At today's metal prices, right out of the gate in our pre-fees, this project is generating over $2 billion of cash flow as a project. If we can keep 35 to 49% of that, obviously, that's a home run for our shareholders. But more importantly, that cash flow goes up dramatically with higher metal prices.
That's good for our retail type shareholders to understand that they'd be participating in that. Well, how do you see the other properties that the company has? What do you think they look like in the future?
So when we started the company in 1999, we had a down gold market. We took advantage of that. The major gold companies were doing what they always do at market bottoms, and that basically sell assets at pennies on the dollar. When I look back at the KSM acquisition, the previous owner, Placer Dome, had spent $25 million at KSM. They sold it to us for $200,000. We took advantage of the down market, buying a number of deposits early on, including KSM and 𝘀𝗫𝗟𝗏, and advanced 𝘀𝗫𝗏𝗏 and KSM. When the gold market hit a bottom again in 2015, it was our type of environment to go out and do additional acquisitions. We scoured the portfolios that were available out there, both in the junior side and the senior side, bought 3 additional projects, which is basically just filling back up our portfolio on projects that we believe we can replicate what we've done before, and that's finding more gold and growing ounces of gold per common share. So yeah, we have the advanced stage project at KSM. 𝘀𝗫𝗏𝗏 is a bit smaller, but still a very robust project in its own right. And we have 3 earlier stage exploration projects, which we believe will fuel the growth in ounces again going forward, as we're now getting back into meaningful exploration on all 3 of those projects.
How do you make a decision on how you will raise capital?
We're very diligent in terms of ensuring that as we do issue shares, the expectation is that that dilution will be more than offset by ounces, addition in ounces. And if you look at our 25-year track record, we have delivered on that, growing ounces in the ground faster than shares outstanding over 25 years. If you look at our relative performance today compared to other gold equities, in our history, since we started the company, the gold price is up by about 800%. Our share price is up by 8,000%. We've outperformed the gold price by about 10 to 1. And that's where I think where the uniqueness comes in, our ability to offset dilution, grow ounces of gold per common share, and then ride the gold price market higher.
That's a really important point, and I'm glad you expressed it that way, because a lot of the investors don't understand that equation quite yet. Ounces of gold compared to what you're issuing as shares.
I think when you look at the industry, the senior gold companies have really been some of the worst allocators of capital on the planet. If you look at their dilution we have a chart actually in our presentation. Since 2007, the 4 largest gold companies in North America have expanded their share count by over 100%. Yet they have less reserves today or less production today than they did back in 2007 before they went on this equity dilution run. So their per share metrics have been decimated. And that's why, in my view, they have significantly underperformed the gold price over the long haul. They don't get the concept of per share metrics being the important drivers of value in our marketplace.
Rudy, can you tell us how Seabridge will approach the issue of ESG? Community and the greening elements.
Obviously, producing copper makes it a green project, but all of our power needs are being met by hydro. So we're not burning diesel at KSM. This is a true green project that'll have a very, very, very small carbon footprint. We've now secured with BC Hydro from the existing transmission line that goes right by our project that they built specifically for this region. We've now secured 245 megawatts of power from this line. That's ours. They're now building our switching station for us. That was part of our substantially started program, and we're going to have cheap hydro power to the site within the next 2 years.
We'll put a highlight of your website at the bottom of the screen here so that anybody who's interested in looking at your presentation, they can head over to the website and check it out from there. And we appreciate you coming on with us today and putting up with my cheesy jokes.
I enjoyed it very much. Always interested in coming back on if you see the need.
Calling all savvy investors in mining and resources. Seeking the inside track on Seabridge Gold? Look no further than 𝗏𝗏𝗏𝗏𝗏𝗏. Our cutting-edge search tool is designed to reveal hidden gems and provides real-time stock updates. Visit for the insights and stay for the gains. Seize the opportunity and explore the magic at mindstalkers.com. Uncover new investment possibilities today. Don't forget to hit the bell below to subscribe and then like and share this video. Let's get the word out there.